Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Rated Arrow, and we are back at it again for another Bag Talk episode. So let's get into it. Before we do that, make sure you hit that like button on the way in. If you've been here more than twice, or you're looking through the content, feeling like there might be some gems in here somewhere for you within the plethora of topics that we go over here, feel free to hit that subscribe button. If you're going to do that, don't forget to hit the bell notification right next to the subscribe button and turn all on, so that way you guys get notified when I drop these episodes. Also, share the video. The further we get out into the algorithm, the better things will be. When we get to 500 subscribers, we will start rolling out some live streams, some Q&A, stuff like that. Also, with these next few episodes, I want to share and let everybody know that I am on Blossom. It is awesome for those of you that are watching. It's a social media platform. Got the page pulled up. I'm under there under Reckless Ray. No dinero. I might fix that right now. I might go ahead and edit the profile. Oh, never mind. When they allow editing, I will update it and put the dinero on there. But right now, it's under Reckless Ray. If you guys want to tap in with me, see things that are going live, I'm also always over here just posting my thoughts, little money-related rant and ravings. The way that I look at it is, it's basically Facebook for people that just want to talk about money. So you're on there with a bunch of other people who want to talk about money. You can see verify your profiles, which my profile is verified. Meaning my portfolio is verified, which means it's tied to a brokerage account with actual stocks in it that I actually hold. Kind of what I show you guys every month, because that's the portfolio that's tied to this. It's the Charles Schwab. So anytime you want to dip in and see what old Reckless Rated Arrow's doing, you can do that over on Blossom. You can also chat back and forth with me direct, comment on my post, check out my stuff, blobbity, blobbity, blobbity. I like it. Pull that off the screen. But for today, we are going to be talking about when to start leveraging. And this is just my personal, obviously, this is not financial advice. It's just a dude on the internet. So what the heck do I know? But this is how I approach leverage. And to date, in the year that I've been in traditional finance space, coming from the crypto space, I have yet to have to post oh my goodness, I'm not sleeping well at night because I think I'm going to get liquidated. Experience. I've never had that. And it's because I do things backwards. While I do utilize leverage, I have a couple of matrices, whatever, that I go through from a logic perspective to see if it's time. Now, I know a lot of you guys, I call it the broken desperate plan. And I can't even say that I can't hate on it. It just is what it is, because I've had to do it once myself. But the broken desperate plan is, you don't necessarily have a bunch of money coming in to cover this debt. You just take the debt out, and then whatever investment you invest in, you're fully committed to that. And if that doesn't pan out, then you're going to get called on the debt, which most of you do this with margin. I do want to go ahead and define what leverage is, though, first and foremost, for the video, for the audience. Leverage generally refers to the use of borrowed resources such as money or capital to increase the potential return on an investment. It can also mean using something to maximum advantage. Here are two common contexts. In finance and investing, leveraging is the process of using borrowed funds to amplify the investment returns. For example, if an investor were to use a loan to buy more assets, any gains or losses will be magnified compared to using only their own money. Which means, if you're doing something great, it gets really great. If you're doing something bad, you're just digging a deeper hole. that's the one that we're using, where I'm not even going to worry about the second version because it's for business strategy. And we're not having that discussion over here. We are finance and investing only. And so when we talk about leverage, most of the time it's in the form of margin, which I don't use as often as some of the rest of you. I use it hardly at all. I am using it to pay off external debts, but I am not outside of our couple of sprints, and we do a little bit over on Robinhood because they give you a free $1,000 in margin. So I do sit within that window over there because it's free money for me. I prefer to use outside money. So I'll do credit card advances, HELOCs, cash advances from not like the corner store cash advances. You don't use those. Those guys will break your kneecaps. But like Cash App, they have a cash advance feature. Some of these platforms will have certain little cash advance features that I'll use. Anything that keeps me from involuntarily having to sell my positions unless I choose to. Now I do quarterly reevaluate my positions and kind of mix them up accordingly, make adjustments as we are seeing currently with, moving a little bit of my msty position out into other positions. You got to optimize for the income. I have an income metric that I want to hit. And so we've got to move things around till we get into that range, because I like to keep it within 80 to 100% on my income. That's the way that I choose to run my passive income business. And yes, I do view it as a business, which brings us back to the leveraging. So getting to 2,000 shares of msty, we did use a lot of margin. We were kind of springboarding the margin, which meant we were using it in short duration. That's how I do most debt. I do not like long-term debt. That's a me personally thing. Like month, few weeks. The kneecap debt, I like being in that range because I like paying it off fast. Because I don't like it holding over my head. Like I don't like holding debt and being like, oh yeah, 10 years down the road, like we'll be paying this off and we're going to use it. And I'm like, no, I want to use it for like at max 12 months. And I want to pay you back in 12 months. And I want to make sure that I pay you back in 12 months or less. So that way I can redeploy. And then I factor that into my yearly growth projections. That's the way that I'm doing my income generation machine that I've built over here. That we're tracking in future financial strategies. We're kind of looking at 12-month leaps. I like every 12 months to be able to have a big cash infusion. That's for me, that's around $10,000 at minimum. And, over the next 12 months, we grind to pay that back. After we clear this debt, we will be able to start doing that. We did run into some hiccups. We had a major surgery. And surgery is expensive, so we ended up incurring some debt. And, we have eliminated the last of our monthly pay because, like, we had one piece of the surgery that I ended up getting on a payment plan for. The rest of it's bundled in and commingled with my debt that I pulled via cash advances to kind of bootstrap this portfolio. And we're in the process of paying that down now. Tap into Debt Crusher if you are interested in taking a look, see at what's going on with that, because I am pretty transparent with that as well. As far as the leverage goes, though, like those are the windows that I look at. I don't look at very, 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 very long term. I don't like going too far out of 12 months. Like out of 12 months, anything can happen. Even within 12 months, anything can happen. And like that's the kind of stress that it gives me to hold it for that long. But in order for somebody in my position, again, we are over here solving an income problem. I can't just save up a bunch of money and do this. This is fast tracking me to not have to work until I'm 70. So I would much rather take the risk up front while I'm young and can afford it. than to have to take the risk when I'm old and have to worry about not having enough money in my retirement to retire, or not having enough anything to retire, which most of you don't. So, and most of the people in my position don't. They're not thinking about that stuff. And I am, because I understand that like failure equals like either being homeless or being on the bottom of the society, which isn't that great. And maybe having to live places you don't want to live or with people you don't want to live with. And I don't want to have to do that. So I use leverage, and I'm a big advocate for it because it allows the middle and working class to leapfrog ahead in a fashion that otherwise wouldn't be afforded to us, and in the fashion of the same way that the wealthy are actually getting and staying ahead. These are tools that they're using. They teach us to use debt to go buy things to impress people that don't like or care about us, while they use debt to increase their asset base. It allows them to expand their wealth. It's that simple. You gotta pivot what we're using the debt for is what the working class and middle class need to do. And if you're poor, obviously you got to get a little bit more income. You got to get a little bit more W-2 income. Like you gotta get at least into the bottom of the middle class. But like these tools are all relative. But I would not, if I was poor, I would not really be using any type of debt that's over $1,000 probably. Like I'd be doing $1,000 springboards. I'm not, I wouldn't recommend going nose deep and using all the margin available. That is the broken desperate plan, which is how most people start off, at least from what I see on the Reddit boards, which isn't necessarily the best indicator. But I mean, when you look at these people who blow up their brokerage accounts, that's pretty much how they do it. They go ham, get all the leverage that they can get, and then now you're exasperating the wins, which is awesome and you feel good, but those losses hit way harder. So this is my logic and the way that I use leverage. First of all, margin is basically the last leverage I use. I use it for lazy debt pay down, basically, which is what I'm doing right now, which is I'll move debt from outside of my brokerage to inside of my brokerage. So I'm using it to like take chunks of credit card payments and put them in there, and then I'll just let the dividends auto pay them down. And then when it gets low, I move another chunk over. Simply put, that's kind of how I'm using my margin. So I don't necessarily use that to buy stocks, because if you leverage yourself to the hilt in your brokerage account, they can force you to liquidate. They'll force liquidate to get their money back. I don't like having anything forced upon me. Like if the credit card company calls, I can choose to ignore those calls. I like things that can't go and just directly start taking stuff from me. It's kind of where I'm sitting at right now. And so I prefer to use credit. I'd rather use a signature loan from a bank. Like I said, Cash App has their deals. But the question of when to start leveraging. Now, for me, I like to have myself in a position to where I'm going to pay back early. And actually, that's the gist of it. I like to be in a position where I'm going to pay back whatever debt it is early. So there has to be money generated already. So I front my money first. I'll get to a usable amount of money. And for me, when it comes to debt and being able to repay and being able to start leverage, that's $1,000 a month. Because if I'm going to take $10,000 and want to pay it back in 10 months, that's $1,000 a month. So my logic is I front my money into the system, start the machine up, get to around $10,000 or get to around $1,000 a month. For me specifically, what I'm using these tools around my business structure right now is high yield dividends. So I'll build my portfolio up to around $5,000 or to around $1,000 a month. That's the goal. Actually, I would say $500 a month. $500 a month would do it because 50% of whatever that payment is, because then if I'm borrowing 10,000, I should be pulling in about $1,000 a month to pay this back around in there. with the positions that I'm using. Now, if you are using less risky ones and you're not sitting in that 80 to 100% passive income range and you're further down, then these numbers change. But I put myself in position to where it's like, no matter what, I should be able to repay whatever debt I incur within 10 to 12 months. And that's how I break down my payments. That's how I break down how I look at the stuff. I'm like 10 to 12 months if it's going to be the big lump sum of money. And the Cash App one has me on a cycle. They're like 5 weeks. So every 5 weeks, I can pull another $1,000 basically. So like $1,000 a month. I can tap that lever as much as needed. I got to pay them a little bit of interest. I also pay myself a little bit of interest. But overall, that's where I go when I'm dealing with how would you put it? When I'm dealing with leveraging. Now, the ideology behind it for me is I want to pay back early and I want to have a safe cushion where if something goes wrong, if I make a bad investment, if I make a bad plan, I got to pivot, which I'm getting better at pivoting. But things don't always go as planned. If something comes up, like I've already got a cushion of $500 a month that I was already making. So even if everything goes down and I take a hit, you had that cushion in there, which is going to catch you. The other thing that I do is I also budget out a stipend out of my W-2 pay because I'm still going to work. That also goes towards that, which also helps pay it down faster. And the reason I want to pay it down fast, I understand a lot of people are like, oh, well, like you could do so much more if you just like paid it the minimum and just paid what you had to. I redeploy these tools. I also like to have that base because like if I do a $10,000 10-month deal and I pay it off in 10 months, once that is paid off, like now I have the asset structure that I've built. I still have that income. So now that applies to the next one. And I can go, hey, now that I've paid this off, I want another $10,000. And I pay that off faster. So eventually you're going, hey, now I can cycle $10,000 every 6 months. Now you're getting $20,000 a year instead of $10,000 a year comfortably. And you're not stressing at all because every time you add another $10,000 to this machine that you've built, this income generator that you've built, you're making it easier for the next 10,000 to come in. And then now it's flowing. Now you're doing it in 3 months. Now you're getting $10,000 every 3 months and keep fast forward. And then you can just stop whenever you're ready to get off the ride. You're also cutting down the amount of time that you have to worry about paying that $10,000 back. Now, if you get $10,000 a month and you can cycle it every month, even better. Either that or you can now expand how much you're borrowing and go back to 10 months and be like, I can comfortably do this in 10 months. And now you can borrow $100,000 every 10 months. Get that down to $600,000 or $200,000 a year that you can leverage into your system. The reason I look at it this way is because you don't want to be in a scenario where your portfolio gets like flash liquidated on you while you're sleeping overnight, because after hours trading is a thing. And as we move closer to 24-hour, 7 days a week trading, a lot more people are going to get liquidated while they're sleeping. Like coming from crypto, you'll get liquidated while you're sleeping. I've been liquidated while I'm sleeping. I've woken up into a nightmare financially because some stuff that happened while I was asleep, because the market doesn't turn off. And it's easier to be in a position to where you don't have to worry about the forced liquidation aspect of those types of overnight crashes. And secondly, it's just responsible. Like you shouldn't be stressed. I mean, I know some of you feed off that stress. You're degenerates, and that's fine. You're gambling. That's a different crowd. That's not what we're doing over in the wolf pack. What we're doing over here is we're being strategic, but like we also want to streamline so that way when we're ready to step out of the matrix, when we're ready to not have to clock into that job, when we're ready to not go take that verbal, mental, financial abuse at that business that you don't want to go work at, that you can make the decision to go, I'm not going to deal with this. I'm not. Like, I don't have to. There's no reason for me to wake up in the morning and do this. I can go do something else. And give you the ability to go do something that you actually want to do. What you don't want to do is screw that up in the process by accruing a whole bunch of debt that you can no longer pay back and still have that bill and have the machinery fail and have the strategy fail. So this is kind of the breakdown of how I look at leveraging, because I do use it regularly. Like Cash App, they got me up to $1,000. I'm smashing that button every 5 weeks, pulling another $1,000 out. Like, let's go. Let's keep feeding the machine, because that's given me roughly almost $100 a month, roundabouts in there, because I'm between 80 and probably 110% passive ROI. And I just pay it back every 5 weeks, and I get to keep the asset that I bought, and they got some dollars back, and I'm able to continue to build up my income base and also buy a little bit of Bitcoin, because we're utilizing the Bitcoin as well as a part of that long-term savings, but also payer of last resort. I've got a cache of Bitcoin that's accessible that I'm willing to make moves on in case something goes catastrophically wrong. Hopefully it doesn't, but there's risk involved in everything. So this is how I'm utilizing leverage. Let me know down in the comments if you guys are utilizing leverage yet. If you want me to do more in-depth videos on the debt tools that I'm using specifically and the ones that I'm building towards using, I'm actually probably going to do that anyways. But, feedback always helps, because I like talking about topics that you guys are interested in as well while I'm documenting, especially if it's something that I'm doing that I haven't done a deep dive in on, or something that you want to know specifically. Let me know down in the comments, and I'll tap in with you. I think that's all we've got for this one. This one's a little bit shorter because I'm trying to make them sweet and to the point. And I don't really have like any offshoot rants for this specifically, because a lot of people don't talk about their debt. You see people talk about their margins, them worried about getting called on margins all the time on Reddit. But I also think some of that has to be made up, because there's just no way people are that dumb. Like, I like to think. So, we'll see what it is. This has been another great episode of Bag Talk. It's your boy, Reckless Ray Dinero. Don't forget to like, share, and subscribe. And also, for everybody in or out of the Wolfpack, if you got value out of this, please share the video. Get me out into the algorithm. Have somebody who's not screaming down at you from the mountaintop. I'm down here with you, just sharing my experiences and the stuff that I'm trying out and practicing, and reporting back the results. And hopefully some of this stuff works for some of you guys, and you can work your way out of the matrix as well. Till next week, people, it's been another great Bag Talk conversation. It's your boy, Reckless Ray Dinero, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.